Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Thank you for joining us for our Tuesday edition of Markets Insights and Opportunities. It's the 11th of January of 2022, and we're going to talk about what markets are paying attention to, what's moving markets, so you should be too. Thanks for watching. So there are very few names out there in the world of economics or even CEOs of corporations or just generally market related that when they speak, markets actually move as a result of their comments, either positively or negatively. And today we just had that with the CEO of JP Morgan, Jamie Dimon. He spoke, and in his interview, he basically said that he hasn't seen, based upon all of the evidence before him, one of the greatest, strongest economies last year and now this year. It's a strong economy he hasn't seen like this in such many, many decades, if you will. And so as a bold, big, strong headline that moved markets early morning, when markets opened up, they were trading negatively as a continuation over the last 4 or 5 trading days because of tech sell-off, interest rates now rising as a result of the impending increase in interest rates by the Federal Reserve. So Jamie Dimon set it up this morning of sort of a bounce that we're seeing now carrying through on the equity markets. And that's a positive thing because at the end of the day, keep in mind, if interest rates rise, when interest rates rise, that means the economy is strong. The Federal Reserve can only raise interest rates if the economy is strong. And then on the other hand, you get Jamie Dimon on the other side basically confirming based upon his consumer data. Remember, he's got a bank that basically sees all digital transactions on a daily basis, and he sees that the consumer has flush with over $2 trillion. It's a position that the consumer hasn't been in many, many years, in fact, decades. So the consumer is healthy. The job market's extremely tight, as we see. If you need a job, you can get a job. Labor markets are out there, and people are competing for talent. But that $2 trillion is very important because as consumers in the U.S. economy have that money is really the backdrop as to the next 12 to 18 months. Because keep in mind, of our GDP, our gross domestic product, 2/3 of that is the U.S. consumer. So when we're looking to commit capital and when we're looking to invest here at Blanke Schein Wealth Management, one of the key components in the economy, now just backed up by JP Morgan's Jamie Dimon, is the consumer. Are they flush with cash, and are they a good standing, and is the economy in whole on solid ground? Well, yeah, we have interest rates rising. In fact, Federal Reserve Chairman today in front of the Senate Banking Committee, part of his renomination process and confirmation, Federal Reserve Chairman Jerome Powell he basically backed off what he talked about last week, and that was he's softening his language, saying, yes, we're going to we're going to continue with the taper, and we're going to increase interest rates. However, we might not use balance sheet runoff, which is the third factor that came out in the December minutes last week that really sent the markets really running for higher ground. And obviously, we saw the 10-year Treasury last week go to 1.8. Right now, we're settling under that. So interest rates are settling. The economy is strong. And obviously, we still have a global health crisis in the midst of the pandemic, where the U.S. just hit a number, and in the next few 5 or 6 days or week ahead, we're going to hit that all-time high number. And we just want everyone to say, be healthy and be safe with regards to the most recent variant of COVID-19. I think markets are looking past this and through this as we see a rebound in some of the major indices today. So that's our update of today. Markets are moving based upon JP Morgan as well as the Federal Reserve Chairman Jerome Powell, who walked back some hawkish language. So we'll see how we finish, but that's how we started. Thanks for watching. We'll see you again next time.